Hello, and welcome to today's Consulting Corner. My name is Lauren Roberts, and I'm the Chief Agency Consultant here at Kite Technology Group. Our topic today is regarding correcting an incorrect transaction with another transaction. There's a few reasons why this is such an important thing to do. When you enter a transaction in Epic, that transaction is going to affect several general ledger subaccounts in the background, and those are considered required accounts. A lot of times what we find is that agencies will use a manual journal entry, which then creates a lot of out of balance situations, and it makes it really difficult to find what the issues are and then correct those issues in the future. So what we want to go over today is how we should correct those the right way and the cleanest way, not using those nasty manual journal entries. So we're going to jump over into Epic and show you how to do that. Okay, so we're going to start by going over the whys. Why should we correct a transaction with another transaction or by reversing a transaction? Just kind of depends on what our options are there, because we know in Epic there are some limitations on actually reversing transaction. Now we are talking today primarily about agency bill transactions. And one thing that I'd like to note is that you have a lot of required general ledger accounts in Applied Epic. Those general ledger accounts are going to generate balances based on transactions that you enter in Epic. And those could be agency bill transactions, direct bill transactions, and so forth. Like I said, we're talking just agency bill today. So a couple of things I want to point out. This is going to be found in Configure over in Accounting and then your required accounts if you'd like to take a review of what required accounts are in Epic. Another key indicator of a required account is when maybe you enter one of these accounts into a journal entry or receipt or disbursement, and Epic says, hold on, if you use this account, you might throw things out of balance. It's not lying. It's really serious and something that you really should be concerned about. But knowing how the required accounts and your transactions work in the background will help you understand how to correct these things properly. And that is what we're going to go over today. So required accounts that are going to be included in your agency bill transactions could be, are in some cases, your producer payable expense and your producer payables. So you've got those down here. You've also got broker commission payables. So when it comes to any of your commission payables, those could be automatically populating. We could be debiting your producer commission expense and crediting producer commission payable or broker in those situations anytime there is commission earned on an agency bill transaction. You also have things like your accounts receivable, obviously, and you also have things like your agency bill income and a broker premium payable or a company premium payable. Those are lots of different accounts that could be affecting your general ledger when you enter a transaction into Epic. Now with the producer commissions, that is a setting that is set up at the producer commission level. If you have automatically posted GL, then you are generating those producer commission payables and expenses. But if not, then those are the ones that are going to be kind of optional in this scenario. So when you enter in a transaction, those are going to be those required accounts that you're hitting. The reason why we want to make sure we correct with a transaction is because it's going to put everything back the way you entered it in. So if we reverse with a reversing transaction, it's putting it right back and zeroing all of those accounts out where those balances were created. The area that we find a lot of agencies kind of go wrong with this is a manual journal entry. So maybe they see on a balancing premium payables report that something is out of balance. So we move that balance to clear the general ledger premium payable, but just moving that one piece doesn't fix the rest of the puzzle. We've also got income, agency receivables, producer payables, all of those different parts. So we want to make sure that we take that transaction back out the opposite of the way it was entered so that all of our balances are going to be in check. And again, if you use those required accounts in your journal entries, receipts, or disbursements, and you're doing that not based on a workflow that follows a reconciliation, you are going to run into out of balance situations. So let's go over and take a look at an example of an incorrect transaction and go through some of these pieces a little bit more in detail. Okay, so the scenario that we have today to share with you is an agency bill transaction that has been entered into the wrong agency. What? I know that's probably not going to be the case for everyone, but it's a great scenario to show you today. So here in this situation, what we have is at the account detail level, there are two agencies selected. We definitely want to try to keep that to one, but we know that there's some situations where maybe a script has occurred in the past or something that caused that structure to remain. One thing you want to do is be very cautious of those policies that are being entered and renewed in your system and make sure that they are on the applicable agency so that we don't get to the situation where we have incorrect transactions in the system. Just a little pre-work there, a little pre-auditing, so hopefully that scenario doesn't happen to you. But if it does, we do want to make sure that we correct those transactions with a transaction. Now, we see here on our policy screen, we're going to use this policy, for example. This was entered under our insurance services demo agency, but it should have gone under the Premier Insurance Agency. So what we have here then is also a transaction that has been entered as well. And we see here where we've already given you an example of how we should reverse that transaction. So in a situation where, we've got a transaction that has already had a payment applied, that payment is going to go probably into the correct agency's bank account, not the incorrect agency's bank account. We could have even possibly paid already this balance to the carrier, and maybe we didn't catch this until later. All of those things could have potentially happened, but we do need to make sure that we back everything out correctly and enter it the right way so that we put all of those balances back where they should be. In this scenario, not only do we have a situation where we've got transactions in that are going to go out of balance on our balance sheet in premium payables, in our producer payables and things like that. They're going to be in those different agencies and on different balance sheets, and they're also going to create interagency payables and receivables. So this is one of those situations where things could really snowball into quite a problem if we don't correct this the right way. Now, you may think, well, I could just manually journal entry over those balances to the right agency. But you can't, because when you do that, that transaction still lives in that old agency. Now you have to figure out how to reverse that transaction. You're going to create another balance when you reverse it in the wrong agency, put it in the right agency. And again, we're just continuing to create a snowball effect here. So what you want to do when you find out that there is a transaction that has been entered incorrectly is back it out. If you have a chance before anything has been applied to that transaction, absolutely go right up here to your actions and reverse transaction. But in a lot of cases, because our agencies are moving so quickly and we're receiving payments and processing things right away, we're going to end up with a situation where something's already happened on this transaction. So we're going to have to back it out manually. So you see here, I'm going to just open this up to give you even more insight into those balances that are being generated. Here at the receivables level, remember I showed you in those required accounts, we have accounts receivable. This is where that balance lives. So this is here and it's listed on the wrong agency, but our money probably went into the right agency. So there you go. We've already got our aged receivable balances that are out of balance. You'll also see that you have agency commission income. So our agency bill income would have generated on the wrong agency. So that's yet another balance that you could potentially move in the background, but it's still tied to this transaction. So if we go to correct or clear out that transaction in the future, we're just creating, again, more balances and more things that are going to have to be reversed. There's your producer broker commission. If there was a true producer here that was earning any type of commission, that could have potentially created that balance in your producer expense, balance in your producer payable. And then, of course, premium payables. We always want to keep those in balance by reconciling those and paying those directly from that pay statement, or making sure that they're associated to the appropriate receipt if it's a return premium. So the way we would reverse this, since it's already been entered and it's already had some action taken on it, you could see that by the credits and debits in those various areas, is we're going to enter the same exact transaction on the same exact policy, just in reverse. So what that does is that's going to zero out all of those balances on the wrong agency, in the premium payables, income, producer payables, receivables. It's going to zero that out. So what we put in, we're taking back out exactly the way we put it in. And that transaction does all of that for you. So we don't have manual entries and manually trying to figure out what do we do with this transaction that's still connected to the old agency and things like that. We're just taking it right back out the way we put it in. We were going to let Epic do the work for us and keep us in balance instead of creating a lot of different issues that could occur from this. So once we have put that transaction back in the reversal way here, we would then need to go over and resolve the policy. Now, keep in mind, if it's something like an agency or structure, we have a situation where we can't change that information once the policy is put in, because you see right here, there's no option to change the agency that's listed on the policy. So in this scenario, we would definitely want to back this policy out by going in here, and we can do an actions cancel. And once we do that, we're just going to put in that flat cancellation date, which was 6/23/25. Right, 2025, there we go. And we are going to put in cleanup incorrect structure. Right. Now we can go into the detail. There's not a whole lot of detail to put in here, but we do want to put in some of that information, make sure that we fill out all of our fields. This situation, it's just going to be a standard cancel policy. We can close this activity and put in here that we are moving to the correct agency. All right, fantastic. So here, of course, we might want to put in what the reason is. It's going to be an other situation. Over in servicing billing, you can go ahead and update your policy status. So here we can go in and change this to an entered an error cleanup. And you may even want to, looks like we've got some missing information there. All right, we could go over to our policy level, and you can even put in here in your policy, do not use. Just some extra indicators for yourself. I see this policy in expired. Yes, my policy status supports that this was an error, but I don't want to use this. And we don't want to have any situation where that could ever be used. So better safe than sorry is what I always say. So once we finish that, you have to issue that cancellation. Don't forget that last step, which is to actions and issue that cancellation. Make sure that your date is good, make sure your status is correct, and you can finish that out. And then from there, it's all about entering the policy back in the correct way, re-enter your transaction. And if you did have things that were applied incorrectly, you may also need to do things like voiding the disbursement and reversing that reconciliation that was entered in. Now, I don't typically recommend reversing a reconciliation if you don't have to. Try to do a reopen, pull in that negative transaction so you end up with a zero reconciliation. Don't forget, never close without paying in premium payable reconciliations. Always associate those to a GL item when you finalize. And then you can go back in and process the premium payable reconciliation the right way, with the right agency, the correct transactions, and get that disbursement re-entered into your system. So that is the correct way to correct an agency bill transaction. Now, there could be several other types of scenarios that we could run across here. We could have situations where a transaction was put into the wrong carrier, and we don't need to reconcile in that wrong carrier and then pay to the right carrier. That's another situation where we need to back that out completely, because in your premium payables, you're generating a balance every time you enter a transaction. I'm going to show you the report that we highly recommend you run on a regular basis, which is your month-end balancing premium payables report, balancing current premium payables report. And in that report, what you want to keep a lookout for is anything that's out of balance. If you do find that you have some out of balance situations, you want to make sure that you go into your status of accounts, report as well and look at the general ledger account for your premium payables. So that could be, a 2000. It's typically going to show right here on your premium payables report. It's going to show you what transactions are entered in the system. It's going to show you the total of those transactions, and then what is the balance that is actually in that premium payable GL. So based on those transactions that were entered, here's the total, and these totals should always match. As long as you are always reconciling your premium payables, always associate the exact amount of a disbursement or receipt to that reconciliation, you should stay in balance. Things can throw you out of balance are those manual journal entries. You could deposit return net premium without associating that to a reconciliation. All of those pieces are going to throw your premium payables out of balance. And keep in mind, there's a lot of other pieces to that puzzle. Receivables, agency bill income, producer payables, producer expense. So we want to really stay on top of your premium payable and agency bill transactions because you don't want to end up with this snowball situation and scenario of we've got balances all over the place. What do we do now? I have another scenario where we've got this transaction that's listed in the other agency. Maybe we run this report for the correct agency and we don't see any transactions at all, but there's a balance on the balance sheet. That's another situation that could occur when you have those transactions entered incorrectly. So at some point when more transactions are entered for that carrier or broker, then you're going to see that out of balance. So again, keep an eye on your transactions. If you do have a situation where you've identified a problem that's happening routinely, make sure you correct that action in your agency with your staff, but also don't forget to run your reports to make sure that you're looking at things on a regular basis. Check out your aged premium payables, your balancing current premium payables, match things to your balance sheet. Definitely use your status of accounts to do any type of deep dive and research into the forensics so that you can find out what needs to be fixed. And of course, you can always reach out to Applied Support if you have any questions about how to fix some of those things. But don't forget, you've got your great friends here at Kite Technology Group too. We have a wonderful accounting team that is always happy to help in solving any of your accounting issues in Applied Epic. So thanks again for joining us today for this webisode of Consulting Corner. We hope that you will join us again soon. Don't forget to follow us on YouTube for all of the latest videos and information from Kite Technology Agency Consulting.